point of view worldwide, the fight has been always against the inflation and the economic growth, whether it is slowed down or slowed down, and also the overall the job market, which is one of the point being looked at from US point of view. In this kind of current scenario, given the fact that world growth, especially US, is now reaching its peak, inflation largely is coming under control, and any slowdown in the growth momentum in US may lead to a rate cut in US. It's quite possible. But as it is, the recent narrative which the central banks have rolled out in US, now talking about rate cut of about 3 this year. My one assumption is one, rates will stay higher for a little longer. At the same time, the expectation of rate cut also will begin, say, mid of year 2024, post probably September. As far as the India concerned, I think economic growth has been quite stable. Inflation has been largely under control. From central bank point of view, forex reserves have also been rising. The liquidity situation in the country is far more stable, and interest rates also is a lot more stable. It's not something which has gone up, unlike US where there has been a significant rise in yields, and India yields have not gone up so much. On the contrary, Indian bond yields have done far better, given the fact JP Morgan bond index inclusion of India sovereign bonds also has the expectation that the flows will come into Indian bond market, therefore it will remain under check. So that is being the case. In India case, my own belief is will probably the current policy rate regime, which is called as repo rate or reverse repo rate, will stay for longer of the entire 2024 calendar year, and probably will start seeing the rate cut in the year 2025 only upon seeing substantial reduction either in the inflation or we see any kind of slowdown in terms of economic growth, which both of them looks unlikely, and therefore in Indian rates may stay where they are today from a policy rate point of view for a longer period. So I think one has to accept the fact that Indian markets have outperformed most of the indices globally, whether it is for 1 year period, 3 year period, 5 year period. We have seen a significant outperformance for Nifty and rest of the market as well. We have seen market continue to remain buoyant for a very long period of time. Election and outcome, also we should make an assumption that it's already getting discounted. I'm also making an assumption that most of the returns in the stock market gets front loaded. I think most of the return comes pretty fast, and expectations, what are the outcomes that could drive the country's buoyancy in general, whether it is election outcome, whether it is corporate earnings, whether it is investment-led growth, whether it is good the monsoon-led agricultural output, and so on and so forth. Most of them get front-loaded in the market. Therefore, it's actually fair to make an assumption, and post-election, the Indian market can go through a consolidation period. Given the fact that we have seen a significant run in the equity market, we must also be prepared for insignificant return coming in for next 1 or 2 year period, which is always a part and parcel of the every equity market rally. Every equity market, after a rally of about 3-4 years, go through a consolidation period of flat period and with the marginal corrections, and then come back. I think in order to ensure that Indian equity market remain bullish in the long term and generate one of the best possible returns to investors, given the fact next 10 years will become a large economy, there is no doubt. But market, in the interest of market, in the interest of investors, let the market go through period of consolidation, which hopefully should happen post the election period. So I think mid and small cap is part and parcel of the market. I think as the market becoming larger and larger, we must also look for companies that can deliver shareholders value significantly over the large cap names, given the fact that breadth in the economy is widening and the market breadth also is increasing. More and more companies becoming more aspirational in order to participate in the overall economic growth of the country. Therefore, you always find many companies doing better than the large cap names. Also, I must give one statistics. In the year 2008, 80% of the Indian market cap used to be dominated by the Nifty 50 companies. 50 companies used to dominate the market cap of the overall market in 2008. The same number today in the year 2023, only 50% of the overall market cap is dominated by Nifty 50 companies. That means the rest of the companies have become large in size, they create a market value and so on and so forth. And given the fact that India will continue to be growing somewhere in excess of about 7.5 to 8% with the nominal GDP about 11.5%, investment-led demand will continue to be the larger driver of Indian economic growth. We have to make an assumption many small size companies would become bigger and therefore they will continue to do well. The recent action, or probably I would say proposal that has come from AMFI in consultation with the SEBI for better disclosure, it is to tell the investors to take informed decisions. Nobody is saying that you should not invest in small and mid cap, and nobody is saying that too much of froth is there in small and mid cap, because nobody can make a judgment on the market valuation. Market will always be irrational at all point of time. It will be always rational, it will be irrational, it will always be there. But only thing is, when we make an investment, chasing the return. If we start chasing the return, there is high probability that the market will make an assumption that this return will continue to stay even for the future. Therefore, your expectations will go up quite significantly. The recent measure that has been taken by SEBI as well as an AMFI, it is to tell investors that when you invest in small and mid cap, you come for long term. But if you come for short term, you must know some of the risk factors, basis which you can actually consider investment, whether you should make investment, not make investment, or you should consider investment for the long term purpose, with 3 to 5 years kind of period. That's what you should look at it. And the risk in the market always will remain small and mid cap. After seeing a significant rise, significant outperformance large cap, it is bound to go through some bit of volatile period. At the same time, when the market euphoria is very strong, you will find some other companies which are not fundamentally sound also going up. I think that's part and parcel of the market. Therefore, we cannot ignore, we cannot even think that should not happen in the market. Froth will always come. You will see some action in the market. As long as the number of companies which files in the whole market, as long as very small, I don't think one should worry about the investment, as long as you make the investment for 5 to 10 year period. So next is always is the next milestone, right? I think when we set a prediction for Indian mutual fund industry, when the industry of the 10 lakh crore size, we set a prediction of 20 lakh crore size. And in fact, 20 lakh crore size was overachieved, and that particular year about 28 lakh crores achievement that they did. Then it was 25, we predicted 50. As we are standing at 50, we are all now saying it will become 100 lakh crore size. The reason I am quite bullish on Indian mutual fund industry, this will definitely become 100 lakh crore size next say 7-8 year period. The reason is the investors at large have been increasing the exposure to the mutual funds, increasing the participation through SIP route. I think people have now understood the best way to save your money, the best way to create wealth is actually through the SIP, and that too for the perpetual. You sign up for an SIP and then invest for say 5 year or 10 year or 20 year period as one makes investments in recurrent deposit banks. So this is something people have understood. It took a lot of time for us to make people understand the power of SIP, power of compounding, power of wealth creation that can come if you come for long term. Now that the understanding of investors have gone up quite significantly, therefore I would assume the natural flows at a periodic interval, not a periodic, a regular interval, that could come into the mutual funds will only keep rising. Therefore, the 100 lakh crore size also is not that far away. from achievement point of view, which I'm sure we will go to that path. See, I think market always go through cycles. Sometimes one segment of the market does exceedingly well, which is the large cap does exceedingly well. Then you will see catch-up game happening in the mid and small cap. And then when the momentum comes in small and mid cap, they do significantly better than the large cap. This is a market that goes in cycles. But at the end of the day, what will determine the market momentum is actually the earnings of the companies, and then PEG, the rate of growth of the companies versus the PE multiples. Then earnings multiples sometimes get expanded given the linking to the overall economic growth. So that's the function of market, and given the fact that the Nifty return versus the small and mid cap return indices is substantially lower, and any incremental money that comes, it always goes towards a segment which is literally reasonably valued. Not too much of high valuation is getting factored in there. If you go by that principle, definitely the large cap should ideally speaking do better than the broader market. But having said that, from investors' point of view, you should not get confused between large cap versus mid cap versus small cap. Ultimately, from an investment point of view, you have to have a mix of large cap, flexi cap, and multi-cap, multi-asset allocation fund, small cap and mid cap. That's the way one should build the portfolio, as long as the investment is being made for the longer period. So I think it's a proud moment for Aditya Birla Sun Life AMC, part of Aditya Birla Capital, part of Aditya Birla Group, to complete 30 years of journey in the Indian mutual industry. I always believe that Aditya Birla Sun Life Mutual Fund is not only coming from one of the most respected group in the country, also been a thought leader in the Indian mutual fund industry to help investors to come into the mutual fund, not just only for Aditya Birla Sun Life Mutual Fund, even for the whole mutual fund industry. So that is the way Aditya Birla Sun Life Mutual Fund have been building their growth momentum and serving large pool of people. Today we manage close to about 3,59 crores of assets under management, close to about 1,16 crores of equity assets under management. As all have come on the trust and confidence that we got through all these times, both from our distribution partners as well as the investors, and that gives us the much more confidence and then the wherewithal to build the business for the next decades to come, many decades to come. On the 30-year celebration, definitely we would, of course, celebration comes in the form of one, increasing the communications with investors on our 30-year success, and we have done many things in the industry as part of our innovation in products, innovation in terms of services, also innovation in the form of reaching out to more and more people in the country in order to ensure that we don't remain focused only on big cities. We actually focus on building the whole nook and corner of the country into the mutual industry. That's something we'll probably start highlighting in the year of 2030th year. Having done that, we also run a series like Bharat series, given the fact that India is now getting connected quite nicely between urban and rural, and I'm also a firm believer the rural economy will be the largest driver of Indian economic growth as we move forward. So we have come out with a series called Bharat series with the intention to cover the places which are relatively unknown as a rural economy, but their contribution is pretty good, whether it is in the agri economy, digital economy, educational infrastructures, or even the small scale enterprises that is getting built around that area. That we intend to cover. First series we already completed with South and one other city from South, and the same way we will do it in West, East, Northeast, and Jammu and Kashmir as well. So these are some of the things you can expect on our 30th year celebration. I must also take the opportunity to thank each one of you for your confidence and trust that you have reposed on us in all these years, and I'm also very sure even times to come that we will continue to keep our commitment to work with each of you closely for your benefit. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।